You have to fire yourself from operations. Whatever you're doing, divide your business in marketing, sales, and operations. And if you are the founder or the executive team, you are in none of them. The 3 habits, daily habit, weekly habit, monthly habit, they answer the question, what the heck is really in your control when nothing is in your control? You have to fire quickly. And this is the hardest part. It's not complicated, it's pretty simple and straightforward, but it's hard to do on an emotional level.
So on today's episode, we're going to be talking about strategy sprints for e-commerce leaders. It's a great episode you do not want to miss, so do stay tuned. Hello, 2Xers. Welcome to the 2X e-commerce podcast. I'm your host, Kunle Campbell. The 2X e-commerce podcast is dedicated to digital commerce insights for retail and commerce teams. Each week on this podcast, we interview either a commerce expert, a founder of a digital native consumer brand, or a representative from a best-in-class commerce SaaS product, giving them a very tight remit to give you ideas to test right away in your brand. So you can improve commerce growth metrics such as conversions, average order value, repeat customers, your audience size, and ultimately your gross merchant value or sales. We are here to help you sell more sustainably to your market audience, customers, what have you. Speaking of which, on today's episode, the one you're about to listen to is an interview I had with Simon Severino. Simon Severino is an author of a book called Strategy Sprints, and he'll be here to talk about how to apply strategy sprints from an e-commerce standpoint. His background is SaaS and services, but there are lessons to be just learnt from that methodology. And what I've personally found is e-commerce businesses that take on a SaaS approach to growth tend to do better. And I have seen people from a SaaS background migrate to D2C, and they're doing really well, whether it's from the service standpoint or from a startup standpoint, whether you're building or whether you're servicing a builder. Just the insights from SaaS, just the data-driven insights from SaaS just gives you an advantage. And that's why I had Simon come onto the show to really shed some light. He's been trusted by, or rather has worked with, companies like Google, the pharmaceutical company called Roche, Consilient Ventures, and several other enterprise and fast-growing startups, essentially. So here's the jig. He has a methodology to help you grow, actually double sales in 90 days. Now, this is not a one-size-fits-all methodology, as you can imagine. However, he has like a 12-step sprint process that could be applicable to yourself. So he breaks down most of the 12 over this conversation, just most of them. He speaks very fast, by the way, but he is an encyclopedia of knowledge when it comes to growth. I was, quite impressed, I have to say, with a lot of what he discussed. And, right after the call, I just reached out to my business partner, Ayo, and I was like, Ayo, we need somebody like him to be almost like an executive coach while we're building out our portfolio of brands. Because if you don't know yet, I run it's a commerce platform. We're building a consumer brand platform essentially through acquisitions. So I is more the M&A guy and I'm the growth guy, the e-commerce guy, and we're just synergizing to build this portfolio of brands. And so I was like, look, at some point we'd need to just sit down with someone like him because he's so knowledgeable. We talked about scalability, 2 levels of fulfillment, how to fire yourself from a sales, marketing, and operations standpoint, form, fit, and function, finding better position. So front row dad and not a weekend daddy, so really just how do you smartly grow a functional unit, a functional business without necessarily you being that bottleneck in it, with very practical advice. So that's all I would say for now. I think it was really compelling. Enjoy the conversation, and I shall catch you on the other side. Cheers. Well, hello, Simon. Welcome to the 2X e-commerce podcast show.
Hello, everybody. I'm so excited to be here.
Fantastic, fantastic. You have a bit of a backstory, right? Before we jump into the intros, let's what were your beginnings like
Oh,
professionally?
you wanna hear all the miserable past life of Simon? Okay. So I start with, like most entrepreneurs that are listening right now, I'm passionate about something. So I started, right? And so my thing was consulting, growth consulting, helping people double their revenue. So I'm about all things sales, all things marketing. So I fly around, I coach people, I help them solve their big problems. They're proud, I am proud, I fly back home. At some point, first year goes pretty well. I do 500,000 in revenue. I feel like it went well. And then my wife, my friends, they go, Simon, nothing is going well. We miss you. You are pale. You are miserable. If you're here, you're just sleeping. This is not the Simon we want. All right. Get your shit together, Simon. We don't need the super revenues. We need you back. And I was like, you are right. You are right. Give me just one more year, one more year. And so I had a couple years to get smarter, right? I was not running the business. The business was running me.
Okay.
And
What
it was really
so
clear.
and the business was coaching. It was
Yeah, I would fly
consulting.
to BMW, help them land one product in that one market better than their competitors, right? Launching a product, crushing it in that market from concept to execution. That's my thing. And so I coach executives one to one. I fly there. We solve the problem. And I don't go home before it's solved. So I would fly every week to Bavaria for one client, to Paris for another client, to New York for another client, and to San Francisco for another client. So I had no life. I was solving the problems of my clients, but who was solving mine?
It reminds me of classic yeah, therapist. A lot of therapists have this issue. And they normally will put in a way for them to get counseling. But just going back to that, how long did you manage to continue with this lifestyle, and what was your family situation at the time of the start, and then up to the point in time you decided, okay, this is really not the way?
So I tried to get some time because I knew it's really tough to solve that. I knew the solution is I have to fire myself from operations. I need to get 2 levels above fulfillment. That was very clear. And I had to take the business model to a more scalable position. So what I did is get my friends and my wife to buy me more time. So I said, yeah. Give me, I just finished this project. I just finished this project. And they were like, Simon, now it's the third project. And I go, oh, okay, you are right. Okay, I'm going to fire myself. Because at that point, I also became a father. And so I wanted really to be here. I had to find a better solution. I didn't want to be a weekend daddy. So I said, I wanted to be really a front row dad, somebody who is here. You know, when you have your events and you want your dad to be here, I want to be there, front row. And so I had to buckle up and change gears. So I got myself a business coach, and I said, "Can you help me scale? Can you get me 2 levels above fulfillment?" and and I found help, and we went through a 6 months super intense coaching, and at the end of it, I fired myself from operations. That was 4 years ago, and I was studying different other industries, and that's maybe one insight from that period. First, you have to fire yourself from operations. Whatever you're doing, divide your business in marketing, sales, and operations. And if you are the founder or the executive team, you are in none of them. Let me repeat this. You are in none of them. You don't do marketing, you don't do sales, you don't do operations. And operations means fulfillment, right? Whatever you're shipping, you don't ship. So you either outsource it Or you create a department inside your company, and if you have a department, you make them more responsible. You make them end-to-end responsible, and they report you every 7 days about all marketing numbers, sales numbers, and operations numbers. And we will go later on into the details how to create that dashboard and those reports in a helpful way. But the first step, if you are listening right now and you are still in one of those three activities working in marketing, sales, or operations, you have to get out if you want to be around in the next years, because somebody needs to work on the business. So on the form, fit, and function of the marketing process, on the form, fit, and function of the sales process, on the form, fit, and function of how you onboard clients, get referrals from them, and make them become super fans and ambassadors of your brand. And all these things are working on the business. And I'm not yet speaking about joint ventures that you definitely want to start, right? Small joint venture partner, 50 per year, so that you can do a weekly joint venture affiliate promotion campaign. Having 50 people promote you per year. You want to also have one big joint venture partner. Our current joint venture partner is Google. It's an amazing win-win-win. Google has a program called Grow with Google. They want to help small and medium businesses grow. Guess what? They don't have the time and capacity to coach each of that small businesses that enrolls for the program. But they wanna ensure that their clients get the best of the best, and of course that they also grow, right? So it's a win-win-win. They bring small and medium businesses, we coach them, and everybody wins. So who is your dream list with the top 100 big joint venture partners that are in your field? They are a platform, or they are somebody who has the same target audience but different offers, and you want to team up with, because that's the smartest way of promoting each other. And now you need time for that. Partnerships.
Okay, so our audience are predominantly in the direct-to-consumer e-commerce space, and so a lot of them, in order to get to where they are, in revenue, have had to sort of roll up their sleeves, maybe in the past to get involvement in the marketing of their businesses. I guess the sales and marketing is fused into one when you really think about it, just due to the fact that, promotions are, on paid media or organic. It's the sales go on with the marketing. How do they divorce themselves from that function, especially if acquisition has been the main way, and they've been able to do it, main way of acquiring customers or growing up until now? How do they do it effectively, so nothing really, essentially breaks that could fundamentally affect, their free cash flows? And what would you suggest to these, e-commerce operators and founders?
We are doing this every week. It's the 90 Days Strategy Sprints program, and I can share with you the rough sketch of the three things that we do. There are 3 habits and 3 strategies that we implement with them. So the 3 habits: daily habit, weekly habit, monthly habit, they answer the question, what the heck is really in your control when nothing is in your control? Because the markets, they do whatever they want, especially right now. And if you cannot control the markets, because life changes, right? In that region, there is a war starting. That changes everything for your clients' needs, and that changes everything for your supply chain, your product, your campaigns. So if nothing is in your control, what is really in your control? And there are 3 things. The daily habit is everybody in the team, starting with you, writes down how they are allocating their time today, and then in the evening, they get 2 reflective questions if they use our templates that they can download at strategysprints.com. In the evening, before they shut down their computer and design the daily flow of tomorrow, they will be asked 2 things. Of all the things that I did today, which one will I delegate tomorrow? And if I would live more freely and more intentionally, what will I do tomorrow? 2 simple questions. But if you do this every day, you will soon find patterns. And so that thing that you find there, you will want to have more time for. And that thing that you find there that you can delegate, you will now find out if you cut it, outsource it, automate it, or delegate it in that order. And that's a daily practice that if you start it as the CEO and everybody, and it trickles down, we have everybody in the team up to customer service, VAs doing it, because everybody should be a leader. And so I have my teams right now hiring people, interviewing people. I don't know even who they are hiring because I can trust them so much because that trickled down. We did it for months and for years together. I was always doing it in front of them. So all the governance tools that I expect them to do, I do myself every day, and I show them how I'm doing them. And so now everybody is a leader. I could exit my company today and it would still run because we have implemented the daily habit. Now, the weekly habit is, okay, what are the marketing numbers, sales numbers, and operations numbers that we want to have every 7 days? Not every month from your CRM, every 7 days. And by 7 days, I mean we want to talk about it every 7 days, half an hour, just to learn from it. What does it mean? What do we do more? What do we do less? But it's really a real-time dashboard. So, for example, your marketing numbers, how many people were on the site, how many did buy, how many hopped off before cart completion. Let's say a cart hop off. Sales numbers might be your currency, all right? How many deals closed? How many purchases? Recurring purchases, new purchases.
Yeah, I think it's easier. I do think it's easier in the context of e-commerce to get these data points, particularly the first few you spoke to, just because they're easy. So in e-commerce, there is obviously the ultimate action is purchase. Then you have initiate checkout, you have add to carts, and then you have product views. And then you also have the ability to how many emails have we captured, or SMS, mobile numbers have we captured.
Of
Yeah.
course, you have those numbers, but how many executive teams talk about it for half an hour every 7 days, learn from that, and change strategy and strategy execution every 7 days? So the point is, one of the problems in e-commerce is that they gather too many data points and too many fancy data points, not the real important ones. So they will gather 180 data points instead of focusing on the 3 marketing metrics, the 3 sales metrics, and the 3 operations metrics. And when I say operation metrics is how many people referred you to somebody else, client referrals, how many colleague referrals, affiliate marketing numbers every 7 days, how many affiliates sent an email to their list that converted, how much did it convert? What was the email open rate? What was the email conversion rate? Marketing numbers, sales number, and ops numbers, and change the strategy and execution plan. Your whole team in all countries is aligned, and everybody has one goal for that week. And they're all working towards that goal. They report about that goal, and they don't just report what they did and what the outcome was, but also what they propose to improve and which part of the SOP manual of the standard operating procedures they did improve based on what they learned this week. That's an agile company. And agile is really important because agile means how quickly can you adapt to new stuff. And new stuff means really 2 things. It means velocity, resilience, and agility. So velocity, it's not just the speed of how much you sell. Velocity is, are you as a whole company moving in the right direction at the right speed? Because you can sell a lot of stuff online, but it's maybe the wrong stuff or it's at the wrong price. That's why velocity in physics has both direction and price. And as you know, there are times where you can sell a lot of stuff, but you are maybe selling to the wrong people in the wrong way at the wrong price, and that will decrease your positioning strength, your leverage, and your comparison to competitors. And when you get the price down, for example, it's really hard to get it up again. So sometimes, yes, maybe you are selling a lot, but of the wrong things to the wrong people the wrong way at the wrong price. So that's the velocity check. And we want to have this discussion every 7 days, because if you have it monthly or bi-monthly, the moment you catch the weak signal, it's too late to react. This is why businesses go out of business right now, these months, because they don't catch the weak signals early enough. The weak signals. You want to have the 0.3% variation from your 4 weeks moving average and last 4 weeks moving average. You want to have it today. And this is, for example, something that I don't see in dashboards when people show me that in e-commerce. I don't see the 4 weeks moving average and the last 4 weeks moving average compared to this week. Because usually it's not a standard function of data collection, but it's something that in 20 years of coaching CEOs that I have, I have learned this the hard way, that you really need this, because otherwise you don't see the slight variations. I call them the weak signals that will tell you early, oops, there is a surprise coming up. There is a plus 0.3% something working better. So what is it? Is it a product, a process, the timing, the creative, the positioning, the ads? What is it exactly? And yes, you want to have a ton of data, but you need to focus on the right few data points. So it must be few data points, otherwise you don't see this. And it must be quick in terms of 4 weeks moving average compared to this week.
Okay. And so what should we be, what other data points should we,
monthly
focus on?
Is once a month, we need you guys to check yourself against competition. So what are our 3 main competitors doing? What else can the client do? And do we need to change something or not change something?
Okay.
I can't hear you.
Hello? Can you hear me? Hello? Can you hear me? Hello? Hello?
Now I hear you again.
Okay. We might have to record this. We might have to take a little bit. We'll cut this off anyway. We're going to cut it off. Okay. From a dashboard standpoint, what key metrics should we have in an e-commerce dashboard, particularly for direct to consumer brand?
Pick 3 marketing numbers, 3 sales numbers, and 3 ops numbers. They depend on the maturity level of your company, on how long have you been in business, and the maturity level of your products. It's different if they are 3 months old or 3 years old. It's different in terms of revenue, in terms of profitability, in terms of if it's a one-off or a subscription. If it's a subscription in ops, you need a cohort, churn rate per cohort. If it's a one-off, you need the profitability, you need the cash flow. But pick your 3 numbers, and the most important thing is just 3. 3 for marketing, 3 for sales, 3 for ops. The next thing is 4 weeks moving average of the last 4 weeks and 4 weeks moving average of the 4 weeks before. And then this week. And you compare that delta. And the next thing is that you ask your team, okay, what's your target? So if our number right now is 4 per week, let's say 4, what's your target? And let them set the goals. Accept everything that is above 5. So you should always have an increment, but they tell you the ambition level. They might say 9, okay, take it. They might say 5, take it also, because it's not really important. Important is that next week is higher than this week. So you will always have, and in our dashboards, they have 2 colors. We have the blue one, which is the current, and we have the red one, which is target. The only important thing is that target is always slightly higher, and everybody sees it on one dashboard every day. Because if your team doesn't see it, you have the overview, but they don't have the overview. So let's say they are improving one little part, they are coding the cart. If they don't know what they're doing, they don't know when it's finished. It's as simple as that. They need to have the definition of done, and they need to set it. So they will only know if they know their 3 marketing numbers, the 3 sales numbers, and the 3 ops numbers that you as a whole team are working towards. That's why it's important that it's just 3 times 3. Because now everybody in your team, even if it's a VA in a country far away from you, and they are just coding the cart, but they will know exactly when the cart is done, because it will contribute to one of these 3 numbers going up.
Right. Okay, you talked about earlier on in our conversation 2 levels, having 2 levels above fulfillment, stacked up. Do you want to sort of break down exactly what you mean? Because these were one of the lever points that enabled you get your time back.
Yeah, definitely. So if you are the CEO, there are only 5 things that you need to do. The first one is the company vision in 3 years. Write it down on 5 pages. What's the purpose? Who is working with you in 3 years on the team side? Who is working with you on the customer side? How do you change their life? When your customer, the end customer, the consumer, when they get home, how do they look like? When they go to dinner, what do they tell their spouse? What do they tell their kids? How your product made a little moment better? Are they excited? Are they more relaxed? Are they more open? So describe the impact that you have on your customers, on your suppliers, on your colleagues, why people want to work with you, and which kind of people want to work with you, and how it feels to work with you. And why, if you wouldn't do what you do, people would miss it. And what exactly would they miss? So describe that on 5 pages. That's the company vision. It's really important, and that's your job as a CEO. The second job is hiring. That's probably the most important and also the hardest part. That's why in my book, Strategist Brains, the last 2 chapters, chapter 12 and chapter 13, are literally my hiring checklist, my hiring blueprints. It took me 18 years to find a good hiring process, from posting it to interviewing people to demoing people to having their first contract, and then to expanding their contract to a longer position, and to define all metrics involved in there, and what to look at, and what is really a waste of time for you and for them, and what really matters, and how to filter people out, and how to onboard them the right way, so that when you have them on the team, they don't jump off after 3 months. Because I had all of these things. I had hiring the wrong people because I was in a hurry. I had hiring the right people, but losing them early after 4 months because I had no SOP for the onboarding part. I was just improvising every onboarding.
So they just saw confusion on your end. They're like, I've been hired. What am I going to do? You're not prepared for them, are you?
Exactly. And then either it sucks too much time out of you because you have to coach all of them, or they are just lost and confused and they move forward.
And they move on.
If they are good people, they're
bored.
Move forward.
Exactly. They're just bored. Yeah.
Yes. And they go like, this is unprofessional. I'm an excellent person. I can go better than this.
I deserve better. Exactly.
Yes. And so that's why you really need people onboarding processes for each role. Yeah. And I know this is the boring thing. Come on, if we are CEOs, that's the last thing that we like to do. It's the most boring thing on planet Earth to describe all positions in minutiae details, how many hours each one takes, and what the expectation is, and how often they need to report. I get it, and that's why I was avoiding it and pushing it away. But if you avoid it now, this will have its price later on when they jump off. And the problem is only the good people will jump off.
Yeah,
The non-A players, they will stick around. So you see the problem with it, and that's why if you really want to cut corner, the shortcuts is right here. Strategy sprints, chapter 12, chapter 13 are literally the blueprints, the checklist.
We'll link to your Amazon. We'll link to your Amazon listing. Okay, so we'll talk about the vision, establishing the vision. We'll talk about hiring. What the other? I think you talked about 5. That you meant to talk about 5.
Yeah. So we had vision and we have hiring. The third thing is a quick competitive analysis once a month. That's our monthly habit. And the first question is even more important than who are our top 3 competitors is what else can the buyer do? So go on the consumer side and think, what else can they do? Because maybe the alternative is not just buying something from your competitors. Maybe the alternative is doing something completely different, like doing nothing, or hiring Lisa, the intern, to do it instead of buying the product, or renting the product, or borrowing the product. There are so many variations, alternatives to buying your product. And that's the first part. And with our tools, you can do it in half an hour once a month, which I think is very efficient. And so that's what you should do, competitive analysis. And it's 6 steps, but these are the 2 first steps. Alternatives, then features. Analyze your features, 10 top features. Where are your competitors winning? Where are you winning? And then out of that, our tool will calculate the 3 buckets. Bucket 1, you are losing, cut costs. Bucket 2, you are meh, your competitor is meh, okay, reduce costs. You will not invest more into that product in terms of time or money. And then the third bucket, you are winning right now against your competitor. So invest more in it. Now you take from the left bucket, let's say you have saved now 20% on the left side for in next month's budget, because remember, we plan every 7 days. It's a strategy sprint. So you have 4 times the chance to change next month's budget. So you will take the 20% that you saved on the left side and you will put it on the right side. Because if you improve the left side, best case, you will have mediocre results. And you don't want to be mediocre. Not in these times. These are not times to be mediocre. These are times to have defendable modes and to crush it. Otherwise, everybody can substitute you quickly.
Yeah. And sometimes people think that defendable moat is at the product level, but from what I'm picking up, it's very operational also in terms of what you do, making your daily habits, these habits unique in a way that no one else can outwork you, no one else can sort of outproduce you. Is that what I'm
exactly? Because on the product level, come on, everybody can build something in China, put a label on it, make it similar to yours. Even Amazon itself, they will compete with and as you know, they have the data and they will compete with you. If it's good, they will compete with you. And you have no chance unless you have built up a loyal audience and a great story behind the product. Because the product is half product, half story.
Yeah.
So if you have a stronger story, you might survive that competition. If you don't have a great story and a loyal fan group, super fans buying and rebuying and talking about your stuff, well, then it's easy for somebody to wipe you out in a minute.
Okay. Makes sense. So after the competitive analysis, what are the components? What are the habits should just high-level CEOs adopt?
Yeah. So it's the vision, the hiring, the competitive analysis. Number 4 is culture. And culture means, of course, you have governance, you mean all the rules, right? What is the minimum standard that if you don't deliver that, you are out? And you have to execute on that. So I'm sorry to say that, but you have to fire. You have to fire quickly. And this is the hardest part. It's not complicated. It's pretty simple and straightforward. But it's hard to do on an emotional level. And I certainly it took many rounds until I got it right and did it on a professional level. Also about that, there is a chapter in the book. But it's really tough because you have to be quick and you have to be objective. And now this goes back to why the onboarding is important, because in the onboarding, you will write down if you use our tool, it's a spreadsheet. You will write down specifically what your expectations are in terms of quality of time estimations and what you expect. And you will need this document filled out in that moment when you have to fire. Because otherwise, on what are you basing this decision, right? So you have to be quick, and you have to have that document. We call it a job scorecard with all the tasks, expectations, and current results and targets. And you need to show the delta once and say, okay, what's your plan to change that? Okay, go change that. 1 week later, okay, show me what you changed. Nothing changed. All right.
Okay.
Because that sounds hard, but if you don't do it, this will be the signal for everybody else. The standards here are not really consequential. And then you have no standards. And that was the beginning of the end of the Roman Empire after 700 years of glory. They started to cut corners, and every other empire also later on.
Super interesting. Super interesting. Okay, so what's the fifth layer? So we talked about establishing that vision, which would be 5 pages. Your vision in 3 years' time should be 5 pages. Hiring and firing, well, quickly. Competitive analysis on a monthly basis. Speaking to features, and also just establishing certain metrics to compare yourselves against. And then the final is really, or the fourth was culture and the governance of your operations. Essentially, what are the rules? What are your minimum standards? And then having a check facility to really check back on it to ensure that everything is going along that culture and governance route. So what would be the final sort of pillar?
The final one is keep the whole firm simple while it grows. And that sounds easy. It's not easy at all, because everybody who has scaled the company knows for each country there will be one legal situation that pops up, and then you will lawyers, and then you will have a new contract and a new SOP and a new variation. So easily things start to get bloated and complicated. It's really important that you keep things simple. Otherwise, your firm will soon feel like a corporation. And believe me, nobody wants to work in a corporation anymore. They never wanted, but now they have the chance. They can go take the stimulus, buy Bitcoin, and be much happier. So it's important now that we keep things simple. So, and by the way, Bitcoin, I think it can make everybody happy right now. Not financial advice. Be quick.
Absolutely.
All right. So the key of keeping things simple is on 2 levels. The SOP manual, make sure things are just 5 sentences, no screenshots, super simple, 5 sentences. So all processes are simple, fun, and repeatable. That's one thing. Okay, so make sure if you have a COO, that's their job. If you don't, then make it your job for a while. Things need to stay simple as you grow. Otherwise, you will get crazy, because every country has a different tax and different legal. And if you make that overrun you, you will soon be lost in the woods and not see the trees anymore. So keep things simple on the SOP side. The other side is the number of projects and activities that people run. So we help our clients limit the number of projects that they run at a time. We tell them don't run more than 10 projects per quarter. So we always plan 90 days. And in those 90 days, we allow 10 projects. So now they have to discuss which are the most important 10 projects. And there is a helpful triage question to define, because when they do the list for the first time, it's around 50 to 70 projects per firm, sometimes even 100, 120. So let's say they make a list of 60 projects that they are running right now. how can you help them as a CEO? How can you help all departments slim down, prioritize? We ask 3 questions. So if they hit one of those 3 boxes, they stay on the list. If not, they're off the list for these 90 days. They might go into backlog, but those 90 days, 10 projects, and they have to tick one of those 3 boxes. First, does this project increase our sales frequency by 25%? And that means either shortening the sales time or, upselling, cross-selling more. So does it increase by 25% the frequency of our sales? Yes, no. Second question, does it increase by 25% the price we charge for the same thing? Now, this is important for marketing. Should we do this marketing campaign or not? Well, if we can charge a higher price because the story is better, the positioning is better, yes. But marketing has to show it during those 90 days. Otherwise, no. It's just an awareness campaign. Don't waste your time and money on that. So 25% price. And the third, can it increase by 25% the conversion rate out of the existing leads? Same amount of leads on your website, same amount of leads on your platforms, but the conversion rate is 25% higher. And that might be from cart to finish or from start to cart, but it must be a relevant conversion metric for you, not just in the awareness or engagement stage, really in the closing, in the purchased zone. 3 questions.
Yeah. And they're very important questions. And that 25% is not overwhelming. It's a good threshold to make net adjustments in the right direction over time. And when that sort of accumulates on a quarterly basis, half a year, and the you see that the bottom line actually gets a significant uplift, 12 months on in a financial year.
There is a magic moment in 3 times 25% in this context because it compounds to plus 99% revenue per quarter. So you can double revenue 4 times in a year if you do this consistently. Of course, it takes some discipline. That's why we have certified strategy sprints coaches that can do this one-on-one with you, and they come with 274 blueprints.
So we can go on and on and on, today, around. The content of your book is very, very interesting. You're published by Kogan Page, which is the friends of ours. Would you say the book speaks specifically to leaders, to CEOs, and founders of e-commerce businesses? Obviously, it's of business in general.
It is written for CEOs because I'm a CEO. I had to solve my problems in scaling my business and keeping it simple. And I shared my blueprints. But I'm getting Amazon reviews that tell me, hey, I'm a product manager. You helped me so much. And so basically, I'm getting also other growth-related roles inside of firms, heads of sales, heads of product that tell me, hey, I'm also revenue responsible end to end. And I have the same problems, mapping the value and improving each stage of the value chain and improving the conversions and the pricing. So there are also other roles. As soon as you are end to end responsible for growth and for revenue operations, then this book is for you.
No, it's incredible because I would say with what you've spoken to thus far in our conversation, this is almost like a CEO's blueprint for growth. That is how I would have titled the book, just in the sense that I'm just looking at the table of content. I'll just read it out to a few people. Eliminate the competition, nail your message and your brand, your growth plan. Real-time decision making with strategy print method. So it's like almost like a sprint methodology to doubling to a CEO doubling their sales. Daily flow, find traction instead of distraction in your ideal week. The value ladder, predictable sales and reaching more people. Feedback. So it's a very structured approach, very strategic. Another one is called the 7 elements of marketing: positioning, traction, reusable content pieces, email automation, retargeted ads, unique mechanisms, irresistible offer, and then your assets, 30-minute pitch, hiring. Some are more general, but you still see the application in e-commerce. So it's a very leadership driven book. That's my takeaway from this conversation. So I'd like to thank you for sharing, a tip of the iceberg. For those people who want to learn more, they obviously can, search for your book. We'll link to it in the show notes. It's called Strategy Sprints: 12 Ways to Accelerate Growth for an Agile, business. You're Simon Severino. Simon, beyond the book, do you offer, workshops specifically, again, for the retail industry, for e-commerce, founders looking to increase their productivity, essentially?
Yes, we do one-on-one coaching, and it's always in 90 days cycles, and it shares the 274 blueprints that we have brought together in the Sprint University, that many like you call the CEO University. And it's really about the blueprints and the shortcuts for you so that you survive these funky years, keep crushing it.
What about accountability? Is there a feedback loop, over the 90 days, with your students, actually reporting numbers, and then you helping them to fine tune, the way they navigate, essentially their boats or businesses?
Absolutely, because we have a dashboard together. So if you start a strategy sprint, in the first week, your sprint coach, the sprint coach will be assigned based on your industry and your goals. And then they will create a game plan after a diagnosis. And in those game plan, every one of your weeks, the next 12 weeks, every week will solve one bottleneck that they identified. And say one bottleneck is the number of conversions from cart to completion, etc. Each week has one bottleneck to solve. And over the 12 weeks, 12 times, you will discuss your dashboard. So you will have a dashboard together. You, your whole team, and your sprint coach have one progress tracking dashboard together. And you see your marketing numbers, your sales numbers, your operations numbers moving up slightly every week. And so you have 12 of these quality control loops. And what we measure is velocity. Are you moving in the right direction at the right pace for your growth goals?
Okay.
And that has 100% accountability loops, because when you know that every 7 days everything will be measured, what makes you more accountable than that, when you know that you have
by Thursday, Friday, you start looking.
And with the coach.
Yeah. Anyway, I just want to thank you for coming on, sharing a tip of the iceberg, as I said, of your knowledge. It's a treasure trove. Thank you. Cheers.
Thank you for doing this. Keep rolling, everybody.